G'day everyone, welcome back to Pete's Investing. It's September 14, 2023. This is the US crude oil price update. First off on the daily, very quickly, you can see here it's reached this resistance we spoke about yesterday at 88.78, and it looks like it's still potentially bullish and strong. If you look at the CCI, that's still heading pretty strongly upwards in a bullish momentum. Likewise, the Stochastic, that's still moving up from the oversold territory towards the midpoint and broken up past its moving average. Now on the hourly, we did have this divergence projected previously, and this one failed because that CCI broke above that point there, which always invalidates the divergence. So that little divergence failed, and we marked that with a cross. So had you been in the trade when it broke below that trend line there, we did say you could do one of two things. Either you can take a stop loss, and your stop loss would have been when it broke above the CCI there, or you can average down. Now, averaging down means you have to wait for it to break at least more than 5% above your entry, and this point there was about 3%. So it still didn't allow us to average down. So if you're still in a trade, there's still some hope, because the CCI, based on this new divergence, you can see there the price is moving to the upside versus the divergence on the CCI is trending down, and it's actually broken quite substantially down on the hourly. On the Stochastic, that's also broken down below the moving average, although that's not a huge indicator for us on this one. Just give us a little bit of an idea of momentum. But so there, if this CCI continues below and this downtrend, then we're going to consider this as a new divergence, in which case we'll mark a new entry point. So if it breaks below that trend line, that's where you'll potentially, if you're not in a trade already, that's potentially where you may want to enter a short. And the target will be, we're still going to go from that low to that high, to that recent high, and our target area will be between that 23% down to the 38% level. So that'll be a new target area if it breaks below that trend line. Otherwise, if the price keeps rising and the CCI keeps falling, we're going to consider that still a valid divergence. For this to fail, like it did back here, we need to see the CCI break higher than that point to invalidate the divergence. So we'll keep an eye on it. We'll keep you up to date and see how it goes in the coming days. So to understand more about the divergence and also some trend trading strategies, support us more on Patreon, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel, hit that notification bell, and see you in the next video.